everyone to the AJ Brown Show. My name is Cyprian Francis, and I'm joined, as always, by the one, the only, the guy we named the show after, AJ Brown. Good morning, AJ.
Hey, Cyprian. Glad to
Good
be
morning.
here. Glad to spend another morning with you.
It's October 22nd, and the first thing that I wanted to do was to jump into an article that I saw this morning in regards to something we talked about last week, which was the Mattel trade and setup. And so, on the surface, we know that we're going into the holiday season. Mattel sales are probably going to go up. Not sure if that's what's driving this 10% increase in October, but it makes sense. And so, I just wanted to jump in and see what your thoughts were on the position, what you might have done since the last live stream, and where we're going from here.
Fantastic. Well, we've been monitoring Mattel. If you take a look at my chart over here, we've been monitoring Mattel over the last months, and we know that Mattel is on a slight downtrend. We look over months, not just in a one period, right? This article was written for the month of October. So they took this low from Mattel and they've been following it up, but they kind of skipped over all this information that's been happening here, right? So they're analyzing a short duration trend and kind of missing what's happening in the long duration. We're going to be sticking to what we defined as our levels of resistance and support. And interestingly enough, SIP, take a look at what's happening today. Yeah, I'm watching it in real time here as the price started up here at our line of resistance and sellers are just taking an approach, right? Notice we had our earnings season release, and that's going to have more power than any news article or any talking head. And this is some of the advice I always give my investors. Don't really give too much credibility to the talking heads out there. Really pay attention to your volumes and your prices because that's going to tell you and the trends, that's going to tell you the truth about what's really happening. So, yeah, if you take a look at this low that happened in the beginning of October and you take a look at it, just looking at the tip of your nose and not going much far after it, you'd say, yeah, Mattel is on a run. But we know that there's that level of descending resistance up here. We've been seeing that resistance tested over and over the last 6 months. We're still in this medium to long duration slight downtrend. We haven't actually done anything. We're looking for the next best opportunity to sell our put premium. Now, if this thing did start to go ahead and shoot up, I mean, we're going to let our protective call just profit, profit, profit. That's the purpose of having our protective call. However, and somebody actually sent in a message, SIP, and they were like, why would you spend so much money on that protective call? For this exact reason. If Mattel does shoot up ahead of the holiday season, that protective call is going to go ahead and do us some good. But if it doesn't, if it starts to reverse down like it's showing that it is, we'll get rid of our protective call now, roll it out to the next protective call, and just look for our next opportunity to collect an income. So these positions will just grow with us. But in all honesty, Mattel's doing exactly what we expected it to do, which is to bounce off this level of resistance.
And so, my question is, your strategy doesn't necessarily need this spike that we're seeing today, right? This is just a part.
Absolutely not.
Okay.
Absolutely not. It will profit on that spike. That's that protective put that person who sent in the message to us was asking about. That's I'm sorry. In this case, it's a protective call. That's that protective call we're talking about. That's to take advantage of that spike if it happens. But if it doesn't happen, the position in its ideal situation just starts generating income every 30 days, right? Every time there's an options expiration. Like I said last week in episode 2, we love the third Friday of every month. That's when options expire. That's when we get to collect our premiums and go on to the next month.
And so that was last Friday. So this Friday means we have 2 more weeks left till the next expiration. Is that right?
Let's take
Or
a look,
on the
right?
on the monthly?
It's on the monthly. So, of course, weeklies expire every week. But if we take a look at our calendar here, the next third Friday of November is November 19th. So that's our next big payday, November 19th. I think that's about 3 weeks away.
All right. So, how long are we going to be keeping an eye on this Mattel trade?
Well, what we're going to do here right now is we've got our protective call in place. And that's because the underlying symbol, just like that news article writer wrote, is going towards where we have shorted some position up here, right? And so it's when the underlying symbol is going against us, we keep our protection in place. When the underlying symbol peaks out and starts heading back down, we're going to go ahead and liquidate that protective, put just like a stop loss order in place to the top side and allow that put to appreciate. We've got a back month put in place here. Appreciate. And then once it bottoms out, we're going to go ahead and sell next month's premium. So that could happen the next couple of days. Maybe it could happen as much as a week or so, but we're just going to be patient. I mean, check in with it every evening, see where it's at, see how it's feeling, and make a trade the next day. No pressure. If we miss it by a day or two, it's not going to make a big difference to our bottom line because it's just time passing by that we profit on.
Yeah. And then, so would we want to potentially be out of the position by the next options expiration? Is that something that you would want to strive for?
No, actually, I want to keep this position as long as possible. The longer I keep this position, this back month put that I'm in will just keep profiting while I collect premiums every month. So I actually want to let that put, if I can have this position last a year or longer, man, that would be awesome. Ideally, our positions last anywhere from about 4 months all the way up to 8 or 9 months. But man, the longer the better because that's just less stress on me, right? I
Yeah.
just check in on this one position, collect my paychecks every third Friday of the month, and it's pretty straightforward.
All right, so then we've got Mattel on the books. It's doing its thing. We're keeping an eye on it. But we are, I mean, are we in the midst? Can we say we're in the midst of earnings season? Because
Earnings have started to roll in. And
and is
so a
that
lot,
the little blimp that you have there on the chart? Is that how you're kind of keeping track?
yes, yes, yes. This is earnings on Mattel, and we're going to be featuring a symbol a little bit later this morning here called American Airlines, and they're having their earnings as well. So a lot of different companies are reporting earnings. We're in our fall earnings season here, and a lot of people ask me about earnings and selling option premium, and what should we do about it? And I got a little 2 cents for you on that if you want to go into that topic.
Yeah, I mean, I was just going to bring up the fact that we are in earnings season, and wanting to know maybe how your strategy in general plays into earnings season, but then going into this American example, which is just from the look of it, it seems like a very similar setup to what we were looking at with Mattel, with you got the channel, and then you're just kind of bracketing the trade.
That's exactly what it is. I got the channel and I'm just bracketing the trade. In fact, you can kind of see what's happening here. But let's talk a little bit about earnings. And so when we get into a premium trade, we want to make sure that things stay stable. And earnings oftentimes is the opposite of that. And so sometimes it makes the best decision that before earnings, we cash out of our premium selling position so that earnings can go by, be as volatile as it has to be. And then once it's back to some stability, we get back in. And one of the ways that I look at it is I'll pull up a 2-year chart and I'll have earnings being recorded on the 2-year chart. And I'm going to look back, especially at the same earnings, fall earnings from last year, especially anything around dividends. You can see that on my chart here. I've also got dividends. You can see American Airlines stopped giving out dividends after last year sometime. But I like to see how has this symbol traditionally weathered earnings season. Because if you think about a symbol's price, what you really got to think about is investors who are investing in that, because it's really kind of, if you think about it on a psychological level, Sip, it's the manifestation of a whole bunch of people getting together and doing groupthink, right? And so, how do these, people who invest in American Airlines, the people who want to, who are in there for the long term, how do they treat earnings? And so I'm looking at the last 8 ones, and for American Airlines, they kind of blow earnings off, right? Every time I look at earnings, it's like it's just another day in the neighborhood. If I take a look at Mattel, same sort of thing. Although around this October season, it looks like earnings season on Mattel gets a little bit spiky, right? And that would make sense because Mattel, like you mentioned earlier, is a toy company, and the holiday season is when they make all their money. So they get a little bit spiky, but then every other earnings season, it's like, hey, another day in the neighborhood. And so I often use that kind of intel just by looking at a simple chart around earnings season the last couple of years. I use that sort of intel to drive my decision on whether I want to do a premium trade through earnings season or whether I'd rather cash out. But if I have any sort of confidence issues, I'll cash out and come back in the next day after all the dust is settled.
Yeah, the one thing that I always found unique about earnings is today is the day of earnings, but we're talking about everything we did in the last 3 months, right? And then whenever investors look at an earnings call or earnings report, they're looking for the information of what's happening in the next 3 months. So there's a lot of conflicting information, and whoever, disseminates it with the biggest, bankroll usually tends to move the stock that day.
It's true. And, when I first started trading back in the late 90s, earnings had a lot more significance than it does now. I mean, the price of stock symbols and even the ETFs that are, baskets of those symbols are so separate from what the actual companies are doing. A lot of times, unless there is a surprise that investors didn't expect, which is very rare these days, unless there's a surprise, earnings has become one of those things where it just comes and goes. So what we're really looking for is surprises, not bottom line changes or anything like that. When it comes to premium, we sell the premium. And as you mentioned, take a look here at American Airlines. I bracket the trade, and both sides of the bracket mean profit. So by bracketing the trade, I can have a spike. The only thing that bums me out is if it spikes and my protections go in place on either one of these yellow lines, then what that means is my trade ends. And like I said, I like my trades to last, not because I make less or more money, but because I'm lazy.
All right, so do we want to go over this American Airlines example since
Yeah,
we're
let's do
in
it.
here?
Let's do it. So I watch American Airlines. I've been selling premium against American Airlines for what, 15, 18 years. They go through these periods, as we can see here, where all of a sudden they start going sideways. People get bored with the symbol. And that's the best time for us, right? We love those boring symbols. And so just you can see right here, just a couple of weeks ago, about a month ago, on September 15th, I purchased some American Airlines stock. I paid $19.20, right? And I just waited patiently because I knew that there was this overhead line of resistance. And as it flirted with that overhead line of resistance, I went ahead and did what I always do. I sold an option. I sold the October 22 call. I made 50 cents back, right? That counted as kind of a little paycheck, a little instant dividend. And that's that coupon that's going to expire away with time. And so you can see here with this white line, it dropped my price of American Airlines down to this level right here. That's how much it was worth then. But then I went ahead and I said, I want some protection. And so you can see here, I put some protection to the downside. I bought a January 2022 $18 call. I paid 90 cents, which you might say that, why did he pay so much for that protection? That raises my cost basis up to this line here. It's because I knew that American Airlines would continue to go down, and that protective option, I could roll it out. If I rolled it out today, I'd be in the money big time. I'd be at American Airlines for $18.65. If I wanted to, I could cash out of American Airlines at a huge profit, but I'm going to keep it going, right? I collected that 50 cents. I collected an additional frosting on the cake by rolling out that protection when I didn't need it. I'm just going to keep doing that every month while watching American Airlines do whatever it does.
And so we want this to continue to go down. We want this to turn back up, or we want it to just stay in the bracket.
Yes. So
That's what we want.
yeah, if it stays in the bracket, that means we collect our premiums every month, right? That's
Yeah.
cool. We like that. If it goes up, then fine. We're going to hit our max profit. If it goes up while we've got our premium sold, we're going to hit a max profit, get exercised out, and we'll move on to the next trade. If it goes up when we're waiting to sell the next premium, leg into the next premium, we'll just let it go. And we'll let it go as high as it can go and take the profit then. If it goes down with our protective option in place, we're going to let the protective option go until till it caps out. And we're going to take all that money. And the key is if it's not in place, we'll just get stopped out. It's called getting bailed out. So no matter what happens here, whether I collect incomes, whether I let it go to the top side or whether I let it go to the bottom side, I win.
Yeah, that's great. And so does the earnings date? I mean, it almost sounds like there's, you don't even have to pay attention to the earnings releases.
So the reason why I like to pay attention to the earnings releases is, again, if the earnings release sends this stock on a wild either down or up, especially if I haven't accumulated one or two, cycles of premiums, well, that's going to catch me by surprise. It's going to end the trade and I won't have had a chance to collect enough premiums to make this trade worth my while. So I do, when I'm starting out my positions, I do tend to look at those earnings seasons to see if there's any sort of volatility. And if there is, I'll move on to a different symbol until the time comes where I can be in this for a couple months without having to worry about that surprise. Once I'm in a premium position for a couple of months, I've collected so much rent, if you will, for renting out the stock that at that point, if earnings catches me by surprise, it's a non-issue. I've already collected enough rent off of renting off the stock that I'm going to walk away with a profit. It's those first couple of months that I like to be a little bit more conservative.
Sure. And so is this one of the positions that you and the members of Trading Trainer, your Thursday night mastermind, is this something that you guys were discussing yesterday?
We didn't discuss it yesterday. We discussed it back in June. That's
Oh,
how
wow.
soon. So we already knew about this. This was on our radar. In fact, people have brought it back up and we said, hey, go back and take a look at the June replay because we already had it on our radar and we've been trading it ever since.
I mean, those look like some very strong support and resistance. So, in order to break through one of those, I imagine something very significant has to happen at American Airlines.
And like we said, and if at this point, now that we've just collected one set of premiums, you can see my cost basis right now is down at this level here. If it were to break through one of those lines at this point, we'd make profit either way. It's just about a risk-free trade.
Another thing that I noticed with this is the price of the stock. Mattel was roughly around $20. This one's at around $20 as well, and that seems like a sweet spot again.
Well, one of the reasons why $20 is a nice place is for people with smaller portfolios, right? Because we got to do these, and a lot of people have to understand this. Options are sold in lots of 100, right? So we have to, when we're doing any sort of our strategies, whether it be a diagonal, which is what we often do, or a covered call, covered put, we have to do things in share lots of 100. So when you see a price of, $18, $19, $20, you're actually thinking about investments of $2,000, right? 20 times 100. So, people who have portfolios around 5,000 to 10,000, that's going to fit right into their sweet spot. But, you could go higher if you have a bigger portfolio. That's no big deal.
Yeah. So, are there any other symbols? I saw that Snapchat had earnings yesterday, and that brought the whole market down. All the social medias were getting killed. Any thoughts?
I gotta tell you, those type of symbols, the ones that are kinda like the high flyers, the one that everybody's interested in, my team and I aren't interested in. We like boring stocks, right? We like boring companies, boring ETFs, the ones where we've got if you can imagine like an avatar, sometimes I tell my folks to think about who would be the typical person interested in this symbol, right? And so you close your eyes and you think about who would and you want that like not to this is not a negative on anybody, but you kinda want that old geezer who's putting his money into the market, who just wants to collect some dividends, right? Or that really conservative family who's not look you're not looking for, like, the young folks on Robinhood that are, throwing up, GameStop and things like that, because that's gonna that's a whole different option strategy that we can talk about on another show. But for selling premium, kind of the mellow stuff that we're doing where we're just collecting 5, 6, even 10, 12% per month on our investments. I mean, we kind of do one of these to that thing, right? We like get away from us. The
Yeah,
symbols we like are those boring ones like American Airlines.
yeah. Another question I had for you was Bitcoin just released their ETF, right? And so I was
Right.
curious whether you can still implement your same strategy to ETFs.
Absolutely, so long as the ETF is optionable, right? So we gotta wait a little bit because the ETF has yet to actually, there's some news about it. We gotta see it launch, and we gotta see if it becomes optionable. Things have to be optional. We found some symbols like, the way that our calls work on Thursdays is I ask all the folks who show up, and we've got an active group now of over 400. But on any particular Thursday, we have somewhere between 50 and 100 people show up, and we ask them to send us, type into the chat area the symbols that they'd like us to, look at and perhaps put on the list for our favorite of the week. And we found so many people were putting in so many symbols last night that had wonderful tradable patterns, but didn't have the options on them to do what we want to do. And that's the key, right? Options give us so much flexibility that it's mind blowing, right? Because options allow us to profit 27 different ways on the patterns that we see. And so if you see a pattern and all you're doing is trading the ETF or the stock, what can you do? Well, you can buy it and hope that it goes up in price, or you could short it and hope it goes down in price. But those are the only two patterns. You get two ways to trade an ETF, a stock, Forex, foreign exchange currency, commodities. There's only two ways, up or down. Options give us the flexibility to trade them 27 different ways, right? And so if you want to take advantage of kind of the stuff that we see where you now have the flexibility, whatever you see. If you see sideways choppy, trade it. If you see up now, trade it. If you see down now, trade it. If you just want to profit on time, trade it. If you think that there's going to be all of a sudden an increase of fear and uncertainty in the market, trade it. There's 27 different ways, and that's why people are attracted to the options, right? Because you can get a little bit, and I hate to say this because I think you should be meticulous at both, but you can get a little bit of sloppier on pattern recognition because you have so many different ways to utilize the pattern for profits and reduce risk on the opposite side.
Yeah, I'm curious to see the whole crypto getting into the regulated markets and how that's going to, affect things on the long term. I know you've been, in crypto for a while too, but that's not what you bring into the trading trainer strategy. But maybe in the next couple weeks, couple of months, there might be some, opportunities.
I will never say never. I mean, the way what has happened in the maturity of options with, different size contracts, like they call them mini contracts that only have 10 shares instead of 100 shares. They've also got, the weeklies, all the expiration dates. It's just mind blowing. But, you know, you stick to your, what you know best. You have to watch out when you're an investor or a beginning investor, because you can get really caught up in shiny object syndrome. And so what my advice is pick something that makes the most sense for your lifestyle. And not your lifestyle, your dream lifestyle, what you expect the lifestyle to be in the future, but your lifestyle right now, right? Because I've had people come to me, because we've got a couple of different programs at Trading Trainer. One of the programs is what we keep talking about, which is our premium selling program, where we've got that pre-recorded workshop that people should check out. I see the link on the screen right there. But we have also, I've been training full-time options traders since 2003, and I have a lot of folks who are like, I want to be a full-time options trader, and I now put them through a questioning process. I'm like, well, can you, act on a signal within a moment's notice like a full-time options trader, or are you somebody who's like busy during the day, right? Because that's not going to be your thing. If you miss a signal as some of the trading strategies, and you don't take it, that could mean huge risk for you. So you really have to evaluate, what can you do right now? How much active investing can you do, and fit what you're going to learn to that, and then try to filter out all the noise. But I think, coming back to your point about crypto, man, that's not going away. And so, and especially when, the SEC gives an ETF over to Bitcoin. I mean, now you've got all sorts of things going away. I know we had a lot of news recently about China not allowing, I don't know to what degree, I guess it's the use of Bitcoin. China used to be the biggest mining, country with the biggest miners. So I don't know what all that means, whatever. But, there's, it's not going away. And so we might as well just embrace it, and not, embrace it, see how we can profit off of it. That's how I do everything.
Yeah, that was kind of the big news this week, it seemed like. Also, what I was curious about is I saw two interesting IPOs that came out. And so I guess it's similar to the ETFs, where once an IPO goes public, there's a time delay on when the options will start trading. Is that correct?
Yeah, and when the liquidity will build. So the other thing everybody has to remember is, like a stock or an ETF issues shares that then people can trade in the marketplace. But a option, we create the liquidity, right? The Options Industry Council sets up a framework and says, hey, these are the standardized option legal contracts that we have that you guys can use to trade amongst yourselves, so that you don't have to go hire a lawyer to write option contracts. And here's the marketplace to trade these contracts on. But it's up to you to write, when we say writing covered calls, what that means is we are creating the option liquidity that people are going to be trading back and forth. When we write puts, I'm creating an option that then will get traded at, who knows, 10, 15, 20 times before it expires, by buyers and sellers. So this liquidity comes from the actual traders. And if there's no liquidity, right, nobody's written an option, then it's very difficult to go and buy and sell. You'll go to the marketplace. And that's one of the things that we teach people to do, right? In our program, we teach people how to evaluate the liquidity, because you don't want to be the only person say, raise your hand at one point and say, I'll buy it. And somebody's like, okay, I'll write it, because you seem to be really excited. And then you've got the option. You're like, yeah. And then it goes up in price, and you're like, who wants to, I want to sell this. Who wants to buy this? And there's nobody. And then you're stuck with this thing. It's worth a lot, but nobody's going to buy it. So one of the things when you're dealing with options is you have to think about the liquidity. Now, I'm not going to brag, but I have a larger portfolio, And so I have to really pay attention to liquidity. That's why you see me always talking about the monthly options. It's because the monthly options have been around for 30 plus years, 40 years in the case of calls. And so people are comfortable with them. They trade them all the time, and there's a lot of liquidity. So with me, with my bigger trade sizes, I'm not going to get caught into a situation where I want to buy or sell something and there's nobody there to buy or sell from. But um, if you have a smaller portfolio than the weekly options, which are they've only been around in some cases 10 years or less, and so they're not as popular, there's not as much liquidity. So when I go in there, I'm like a big fish and I can like move the market. I don't want to do that. I want to be the little guy because I just want to do my trade and ride on the coattails of the big guys. So I don't know if that makes sense, but the scoop is liquidity is where it's at, and we got to watch that for options. So when we have a new IPO, when we have an ETF, we have to wait not only for the options to be, the options framework to be created, but we also have to wait for people to get excited about it and start trading it.
Yeah, and one of the IPOs was a famous Chicago restaurant chain, Portillo's. I don't know if you've ever been to Portillo's or heard of it, but it's famous in Chicago. And so when I saw them go public, I was like, oh, that's interesting.
You're a Chicago boy through and through, aren't you?
And good for them. And then on Bloomberg, they like put up a chart of like their top sales, and it was like Italian beefs, like number one, their number one product is the sale of Italian beef.
Yeah.
So I'm going to be interested to see that. And the other one was WeWork, right? I don't know if you've ever been to a WeWork or worked at a WeWork.
There's one right here where I'm at.
And they've been in their own drama the last couple of years
due
to the shutdown and all that. And so for them to finally go public, it's like, okay, are you guys going to figure it out? So it'll be interesting to see.
And it's been interesting because WeWork has been capitalizing a lot on retailers that are getting kind of run out of the show by Amazon and by e-retail. And so WeWork's been taking over and doing partnerships with them at discounts for some of their spaces in big cities. So I've been paying attention to WeWork a lot too. But yeah, the pandemic hit them hard. And so I've been interested in that IPO. The thing you got to remember about options, their predominant use is by big hedge fund traders to protect their trades, right? They're the ones who are, if you look at the volume of options and their purpose. So if WeWork and Portillo's starts to become something that gets the interest of big hedge fund traders, mutual fund traders, pension fund traders, the big guys, then they're going to start creating some option liquidity because they always protect themselves, right? So we'll watch the space carefully as these shows continue.
Yeah, for sure. And as you mentioned, for anybody that's new in the audience that is interested in learning more about Trading Trainer, AJ's course, AJ's methodology, I highly encourage to go check out that workshop. It's free. It should be very informative. And as always, feel free to leave any comments on the video, on social media. I know AJ does a really good job trying to get back to everybody. And I think that's, a good end to the week there, AJ. You got any final words?
No, there's a couple of tickers that I think people should check out. I definitely think they should keep looking at Mattel. I definitely think they should look at American Airlines. Look at all the airlines right now. Maybe skip Southwest for now. Southwest has been too much in the news. Remember, if you're going to sell premium, look for boring symbols, right? Symbols that aren't in the news, symbols you think about. Just look around your house at some, products that you think are boring. Procter and Gamble, things like that. Those are the one you might want to focus on and see if you can't do some of these strategies that I'm talking about. Go watch that workshop. You'll get an idea of exactly what the heck I'm talking about. I go into some great detail there, and then come be part of our Thursday night calls. We'd love to have you.
That's right. All right, AJ. Well, those are fine ending words. I know that you're on the verge of having your kid. Yeah, could that happen any day, any moment?
It's any day. My first baby girl coming any day now. We'll see.
That's exciting. Hopefully we can share with the audience at some point. The little mini AJ, right? The future of options trading.
That would be awesome.
All right, everyone. Thank you for tuning in. Thank you, AJ. We'll look forward to seeing everyone next week. Have a good weekend, everyone.
Take care.